Crave family, and welcome to our first edition of Words of the Wise. The idea behind this program is every single month we will address a topic that matters, especially as we are becoming artists. This program is meant for young artists, so we hope that you get a lot out of it. On Facebook, I did a little survey and I asked people what was one thing they wish they would have known before they became an independent artist. And the number one response that I got back was taxes. Many people said taxes, and we are about to go into tax season if we haven't done it already. So, for our first Words of the Wise, I thought it'd be very fitting to interview Crave Theater's tax human, Susan Hjort, and I am very excited to share this interview with you, and I hope you get as much out of it as I got out of it. Hello! So, as many of you know, my name is Sarah Andrews. I am the co-founder of Crave Theater. I am here virtually with Miss Sue. She's going to be talking to all of us about taxes. So Sue, why don't you explain a little bit about who you are, what you do, and how you got started in this business?
Oh, okay. My name is Susan Hjort, and I am a CPA. And I primarily do tax accounting for individuals and businesses. And oh my goodness, I was always really good at math and puzzles and things like that. And so I majored in accounting in college at University of Oregon, as you can see, and then got out and did some accounting for a while, took some time off to raise my kids, and then got back into it about 20 years ago, and had started my own practice with my brother and have been doing that for 20 years and set to go on for a little while longer here. And so anyway, that's how I got started. And it's a small, considerably practice, but that means that was the part that was exciting to me. I got to work with people and help them because I have two sides of my nature. When I was in high school and then some now as an adult, I've done some theater work. So that's the side that's a little more outgoing, a little more jazz hands. And so I enjoy working with people, and my joy of doing this is not only completing tax returns, but helping people to do better, help them with their taxes so that they're getting the biggest bang for their buck. And it's really when I'm describing something to people and answering their questions, and I see that aha moment in their eyes and they've got it and I can help them, that really brings me joy. And so that's what I do. So I met Sarah because she came in and had all her things based on her experience in theater. And so we formed this relationship. So
True. When I first came to Sue, I had no idea what I was doing with my taxes, and I still barely have an understanding of what I'm doing with my taxes.
But she doesn't need to.
But Sue has really helped me develop a better understanding of how to actually do my taxes correctly and how to keep track of my expenses and things like that, which are skills that I did not have when I was leaving college. So I did a survey and I asked people, what is something that you wish you would have known before you became an independent artist? And the number one comment was taxes. So this is our first webinar series video of Words of the Wise. We're going to start with taxes, which leads me to my next thing. So Sue and I were talking before this, and because Sue's right, I don't even know what questions to ask in regards to taxes. I'm going to let Sue start this conversation, and then we'll just go from there. So
okay. Yeah. So like I said, I have a little bit of background doing some theater as well as taxes. So I'll kind of talk to you about the different ways people can be involved in theater and then kind of move that into how that affects the tax realm. So I've done a little bit of community theater. That's generally volunteer and unpaid and all that kind of stuff. But I did dabble into some extra work. And so I was an extra on the show Leverage when it filmed in Portland. And that was fun. And I have a little moment, my 30 seconds of fame, if you see this particular episode. And anyway, so that they paid by W-2. All the extras were paid like through an extra service. I have 3 or 4 clients that are independent artists, and they do tend to get paid in a combination of W-2s and 1099 work. W-2 would be when you're an employee. So most of you will end up having some sort of W-2 job, even if you do some theater. And so that's straightforward and easy. The W-2, they take out the taxes for you. They do an employer portion of taxes, but they also take out your employee portion. And they'll even perhaps withhold some federal and state taxes. So you don't need to necessarily worry about that. That just goes on your tax return. There's a place to fill it in and it shows up under wages. It's when you delve into that realm where you're a 1099 employee. 1099 just means you're independent and they just pay you a flat wage. They don't take any taxes out. It's like paid per job or, how many hours you worked on that job, something like that. And the form they give you in January, the next year is called a 1099. And it's just filled in and it says, hey, we paid you $2,000 or something like that. Okay. The difference with the 1099 is that you end up having to pay your own Social Security taxes on it. And that sometimes is referred to as self-employment tax. You're self-employed when you get a 1099. They're not giving you a W-2. They're considering that you have other jobs all over and you're independently hiring yourself out to various, whether it's a play or a film type thing or whatever it is. And this also applies to people who are doing like stagecraft, maybe your set design, maybe your set production, because I've dealt with people that do that kind of thing too. Normally, what you want to do when you have 1099 income is set up on your tax return. You're going to have a Schedule C, and a Schedule C is just an independent business. Okay. So the income from that is whatever you got from all your different gigs that you were paid by 1099. So that's the wages. That's the income part. Easy. The hard part is that you want to deduct some things from that so you pay as little tax as possible. You don't want to overpay. We're not talking about cheating or making up things. We're talking about legitimate expenses that you get to take because you're an artist that other people don't take. So, for example, if you're an actor, and some of my actor people, maybe you had to buy your own costumes. Maybe you had to do your own makeup, those kind of things. Maybe you pay an agent. So there's commissions. Maybe, you have to have a license, not necessarily a license, but maybe you're in an actor guild or union or something like that, and you had to pay dues. Those things are all deductible. So anything that you use to be able to do your job for that gig is deductible, or things that you keep like in your repertoire. Okay. For example, when I went to just do an extra thing, like I told you, it was W-2, but if it was 1099, say, that extra thing asked me, come dressed like the 40s, everyone wear a hat, come with 3 changes of clothes, and men need to have a suit. If you're doing those things just for that job and you're a 1099 person, an independent, and you maybe you scour that Value Village or Goodwill because you're looking for those kind of costumes that are going to be, even like if you auditioned for something and you wanted a specific costume because you wanted to create that, that image. Those kind of things are deductible because you're buying them so that you can earn income, so that you had income. That's what makes them deductible. Okay. So those are the kind of things that I want you to keep track of. Go ahead, Sarah.
I was going to say, one of the big things that you taught me was also space. So like this office right here is a room in my house that I primarily work out of. Therefore, that is something that is deductible for me because I pay rent on this house. So.
Okay, let me go into that. Yes, because definitely. So as an independent person, you're allowed an office. So some of my people, like say financial advisors, they have an office that they rent and they pay rent on that space. And so we deduct that for them, a space outside their home. But if you're independent and your only office is this room like Sarah has, that she's working out of, and it's in her house, then we can do office in home. Okay. Office in home means there's rent on the house, there's utilities on the house, there's internet to the house, all those things she's using as part of her office. So we take, say, this 1,000 square foot space, your apartment or whatever, and she's got a room that's 10 by 10, so it's 100 square feet. So that 100 square feet out of 1,000 in her home is 10%. So Sarah will give me all her rent for the year expense and utilities and internet, and I'll take 10% of that and put it on the tax return as a deduction to her 1099 income. And you can do that too. So you'll want to keep track of some of those things, utilities and internet and rent, those kind of things, to do office and home as a 1099, self-employed person. Which leads me to another thing, Sarah, mileage. Okay. So, well, because of things that you're going to have that they're a direct thing, but you don't think of it like a costume or tools or something like that. Okay. So because your office is at your home, you're going to have mileage from your home to your locations. So wherever that gig is. Okay. So you went there for 2 weeks, and your office to this place is 10 miles round trip. So you're going to record that on a calendar somewhere, your Outlook calendar, your phone, wherever it is that you're recording or keeping track of your appointments. And that is going to become your documentation. So print your calendar at the end of the year, or some sort of thing, send it from the phone to the cloud and then print it and just throw it in your file that's for tax documents, so that you can show, okay, during the year I had 2,000 miles that I went from, each of my different places that I did for work. And then there's a mileage rate every year with the IRS, and we'll use that times the miles to record how much deduction you can use for mileage. This all seems rather complicated for someone to do, which leads me to, it's usually wise to have a tax preparer. This is how Sarah and I got to working together, because she had a lot of different things going on. She had some W-2 income, and I hope I'm not oversharing, Sarah.
You can share, it's fine.
Okay. She had 1099 income. She had some other stuff. She was producing a show. So she had a lot of these income sources in a lot of different areas. She needed assistance. I mean, I'm talking to you about it today, but I'm going to say you're probably not going to retain 100% of what we're talking about or even understand everything on the first time. It takes a while.
I mean,
Go
true
ahead.
story. I'll just share the first year I worked with you. Like I said, I didn't know what I was doing at all. And so Sue did my taxes. She gives me my document and she's like, "You owe the government $1,200." And I like broke down in tears. And I was like, I don't, money, what? And she was like, "Whoa, let's backtrack."
Come into my office. It's a terrifying thing when a tax preparer sees someone crying at the front desk. We never want that to happen.
Yes. I gained a small reputation for that, but like
no one remembers, just me.
Sure. But no, in all seriousness, like that was the day where like we started exploring all the things that I could deduct, and then it became clear that I did not owe the government $1,200; they owed me $1,200, and it was very, very helpful.
Yes, because she came in and I said, "Well, Sarah, this is what you gave me, and but what about this income over here? I mean, did you have expenses for your subcontractors? Did you have script? Well, yeah. Did you have to rent rehearsal space? Well, yeah." It's like, well, you can deduct all that. So we just started talking. It's a good thing. And I never think it's bad when someone comes in and says, "Can I deduct this?" I mean, unless you're asking me to deduct your dog. Yes, people have asked me if they can deduct their wedding tux, and they've asked me if they can deduct funeral expenses for their father. It's like, no. But there's a lot of things in between we can deduct. So, yes, but it's keeping track of all these things.
Mm-hmm.
I wanted to kind of go back around, Sarah, and talk about, because I talked about actors and things like that. But I also want to talk to you that are doing production and sets and stage managing and all those kinds of things. You've got your own set of deductions. So like I said, I have 3 or 4 clients that are in the theater type profession. So one of them does production and gets a monthly stipend from someone to work at a theater. And he's pretty much sets and background and, everything from music to lights and all that kind of stuff. So he's got a lot of things that are, what do we want to say? His toolbox, So if you've got your own toolbox that you're buying because you've got to do these sets and you're going to need, XYZ screwdriver and rig and electric, screw in things. Yeah, that I don't know about. But you can deduct those things. Or you buy a few things. Hey, I was at Restore and wow, I saw these backdrops, this wood that would be great for sets. And so I just bought it and I keep it in my inventory. Yeah, we can deduct it. So those are all things that you want to keep track of too. You have different kinds of things that you deduct than somebody who does, financial planning or, whatever else, but it's still deductible.
Yes.
Okay. Yes. What have I missed, Sarah?
Oh dear.
Okay, we did office and home. We did mileage. We talked about, the kinds of things that you might have that you deduct. Then so let me do, Sarah, all those kinds of things that everybody has. What do I want to say? Office supplies and just supplies in general that you, that's kind of like the tools, things that you have, tools of your trade. You can do a portion of cell phone, because I'm assuming that cell phone is your primary means of communication with all these different jobs. Let's see.
What about trips? Because I know that before the pandemic, I was traveling at least once a year to go and see theater in other places and do some type of research. So if we go on a trip, how does that work tax wise?
Very good question. Okay, so travel, I mean, it might even be like a conference or something like that that you're going to, or say, you travel to do, some work or something like that. So definitely you can deduct the travel to get there, whether it's plane or mileage, or I rented a car, or I took the bus, whatever. Okay, so there's the transportation portion. Then there's I stayed overnight 1 or 2 nights. So there's the hotel portion. And then there's meals because you were out of town. The IRS, I take the total amount of the meals, and then the IRS lets you deduct 50%. But you keep track of all those things, while you're there, coffee, whatever it is. Okay. And then, like, the cost of the event, the play, the show, whatever it is, as well as, I'd say, when you're in town, I have some writers, and they do the same thing. They when it wasn't pandemic, they'd travel to locations because he needed some backdrop and setting to put his novel in. So that's another type of research, is what I'm getting at. Maybe you'd watch shows, or again, shows, plays, these people do movies, they buy some Apple music to go with some of it. Anyway, research is deductible for what you're doing, like going to shows and stuff like that. So that's a definite thing that you can also deduct. Like plays.
Buying plays can get really expensive.
Oh, yes, because you have to pay royalties when you're producing a show. Yeah,
we have to pay royalties, and just to do the general research that it takes to as a producer,
right,
to do the general research, it requires me to read a lot of plays. And sometimes I can get away with like emailing an agent and asking for a copy of the play that I'm considering producing.
Yeah.
Free, but when that's not free, then I have to buy the plays. And as you can see, it takes up space.
Yes. Yes. No, definitely. Because when I was working with the community theater, I was the treasurer. And so that was one of the biggest expenses, was royalty, or like you said, purchasing the plays, because they'd like get some, and they had their play committee reading them to see if we wanted to do it. So that type of thing. Yeah. Research is definitely a deductibility along those lines.
So staying on the travel boat here.
Oh, sorry. Yeah.
No, it's okay.
I kind of rambled. Yes.
Oh, no, it's fine. Staying on the travel boat here. Let's say, hypothetically, right? We have an actor who has this really great opportunity to do work over like in Edinburgh at the festival, or
sure.
In London or something like that.
Yep.
So as a tax professional, what would be your recommendation for them? Assuming that they're going to live there for a couple months working, what would be your recommendation for them?
I would tell them to track the expenses. I mean, keep track of them. As a matter of fact, I do have one of my theater clients, as well as doing costumes. She does travel to Edinburgh at least when she can, every other year, if not every year. And so I think she stays with someone she knows there, because she's not giving me like, 2 months worth of hotel or B&B or whatever it is. But, she'll do definitely the cost for the festival and the travel to get there and that type of thing. So I think it's just a matter of, and keeping track of that sort of travel and cost of staying there. But if you're doing a long-term thing, there's also per diem rates, they call them. So say you don't want to keep track of every single meal you've done in Edinburgh, you could say, here's my calendar. I was there for, whatever it was, 5 weeks, then I can just do a per diem for those meals and that type of thing. As long as you're getting either some kind of income or it's some kind of training, she goes there for training. And it's just maybe a couple weeks or something like that while the shows are going on. And so as long as you've got some sort of training or some sort of reason that you're there that's enhancing your business, which is yourself as an actor or a crafts person or something like that. Yeah, she does costumes. So anyway, how did that answer your question?
Yes.
Okay, great.
So I guess the last thing that we should talk about is organization, because that was a tough hill to climb. And, what we're talking about now is saving so much paper and so many receipts and just making sure that you can prove that you purchase these things. So in regards to organization, how long do we need to keep all this stuff? And how would you recommend we organize it?
Okay. Very good questions. Okay. So yes, it can become a paper nightmare. However, with everything that's online and the way that we can do things now, it can be a little easier. Okay. So here's what I'd recommend. First of all, I believe, Sarah, that I gave you my Excel spreadsheet.
Yes.
My easy, breezy Excel spreadsheet. So if you can work Excel, then it takes away half the problem. So I just kind of did a month by month thing for Sarah, and incomes across the top, and then some usual expenses that she had go down the side, and you fill it in kind of month by month. Now, to make that easier, you use one bank account and maybe one credit card for, and that could even be tied together. If you have the bank account with the Visa debit credit card, then simple. Everything is going to be in one card, and then every month, or it can be every 3 months or every 6 months. But I recommend you kind of get used to filling in all those kinds of things. And then it's not such a big deal at the end of the year. Okay, so if you're using this one account, then everything is on that bank statement. Even if the bank statement's online, you print out the bank statement once a month, and that becomes your most important source document, because the IRS will use that because it's a third party. Okay, so even if you don't have every scrap of paper, you've got the bank statement that shows, all your debits. And nowadays, usually everything says, okay, I went out to lunch, or I bought, a script, or, whatever it is all on that one place. Now, if you do save some of these documents, or say you bought something online, so you've got an email that shows it, just attach it to that bank statement, put it in the file, and boom, you're done. And then if you then fill out our little spreadsheet month by month to show, here's what I brought in as deposits, as income, and here's what I spent on my business as an actor or a producer or a costume designer, all those kinds of things. It makes it easy. And that's where the professional comes into play, because each person like me, CPA, tax person, will have their own method of being able to sort and take care of those things that makes it easier for you, makes it easier for them to do the tax return, and then nobody's quite as frustrated when they're and all the stuff is there. As you get going with a professional too, and you do it from year to year, then they'll start asking the questions. I don't have mileage, or oh, didn't you do any shows this year? I don't see any expense for scripts, or did you travel at all? You traveled last year, but I don't see any travel this year, presuming it's not COVID. Those kind of things. How about research? I didn't see you went to as many plays, or is there something we're missing? Did you pay for it out of your personal? sometimes, you miss and you pay some things out of your personal, So we've got those various things. Like, for example, when you do office and home, well, your home rent and utilities are all going to be paid out of personal. We're just going to import that, by discussing it. But it starts with a nice spreadsheet to be able to summarize stuff. And if you have one bank account or a credit card that has most everything on it, then if you don't have every document, you're okay. But what you do have, just attached to that bank statement, put it in a file, and that becomes your support. How long do you need it? Okay. The IRS can only go back and audit you 3 years, but the state can go a little farther, like 5 years, and they can go a little longer if they've got reasonable cause. So I have to save things 7 years. So I generally tell people 7 years. But if you're moving and you've got everything 5 years and older, yeah, you can 5 to 7 years. How's that? And then you can and then shred it. Yeah, don't just throw it in the trash. Okay, how's that?
Excellent.
Good. Okay.
So we've covered a lot of ground today.
Yes.
Is there anything else that you think we forgot, or any final words of wisdom that you would like to bestow on the humans before they venture out into their tax world?
Okay, so we'll just, to keep it simple, yes, we've covered a lot, but the main thing is to, have one bank account that everything that you earn or spend goes in and out of. Make sure that you're keeping track of mileage and travel. And yeah, it doesn't have to be hard. You just need to have a file where every time you do something for work, put it in the file. And then at least we can, we've got all the pieces, we can figure out how to put them together. But even if you think, I don't know if this is deductible, put it in the file, because it's a possibility it is. If you used it for work and, it's something that you wouldn't have bought had you not been in that job, it's probably deductible. So, and if you have a question, I would get a professional. It seems like it's a big expense, maybe it's like $300, or something, for your tax return with all this thing, but it's well worth it, because that's usually when I see people is, I got this letter from the IRS. You don't have to get a letter from the IRS if you work with someone and they help you out. So it's a cost benefit thing. So that's what I'd say.
I highly recommend people who know what they're doing to help you with your taxes after years of trying to do it on my own. Yes. That said, yeah, you are your own human who can make your own choices.
Yes, definitely. Yeah. All righty.
All right. Well, Sue, thank you for joining us today.
You're welcome.
Thank you for speaking on this topic, and have a happy tax season.
Thank you.
It's about to happen.
It comes whether you want it to or not. So yes, I appreciate that. And I will be seeing you soon. Okay.
Once again, I just want to say thank you for joining us. If you like what you saw and you want to keep seeing more of it, know this is a new program, so we're just starting off, and I would like to start paying the people that I interview. So if you want to donate to Crave Theater, you can do so by going to cravetheater.org. You can also there sign up to become a monthly member if you just don't want to think about it and you just want to support these videos. $5 a month goes a really long way with us. So thank you again for all of your support. Subscribe to cravetheater.com on YouTube, and I hope to see you in the future. Bye.